As you can imagine, there's a lot going on with the mortgage process when it comes to buying a home, and if you don't know what's going on, it will stress you out even more. But I'm here to make things easy to understand. I'm going to walk you through the mortgage process so that you know what's going on every step of the way. In this video, I'll break down how the mortgage process works, from starting your application with a loan officer, to ordering your appraisal, then going into underwriting, and finally celebrating with your clear to close. That way, you can feel confident starting your home buying journey. The first step in the loan process is completing your loan application, which involves you talking to a lender to get pre-approved. The lender needs to have an understanding of where you stand financially. So you'll fill out a client questionnaire that asks about your financial situation. This questionnaire typically includes questions about your income, employment history, debts, assets, and your credit history. After completing the questionnaire, you'll need to submit documents to verify the information in your application. These documents typically include W-2s from your employer, recent pay stubs, bank statements, tax returns, and sometimes additional documents like proof of other income, or information about any outstanding debts you might have. Lastly, there will be a credit check. This is where the lender does a hard pull of your credit report to get all of the information that they might need about your credit score. Your lender uses all this information to create a detailed file of your financial status. They will assess your ability to repay the loan based on your income, debt to income ratio, credit score, and overall financial health. This will help you understand how much home you can afford and make sure that you can qualify for the home that you want, which will come in the form of a pre-approval. Once your lender issues this pre-approval, which is a conditional commitment for the loan, you can start working with a realtor to look for homes. The pre-approval letter shows sellers that you're serious with financial backing to purchase a property. And remember, you cannot submit an offer on a home without one unless you're buying 100% cash. After you find a home you like, your lender or loan officer will be able to run what's called a closing cost estimate for you. This estimate will tell you your estimated costs in buying this home, which would be your monthly payments and your estimated cash to close this home. Many people don't realize that there are a lot of different loan products available, and choosing the wrong one can cost you a lot over the lifetime of the loan. So work closely with your real estate agent and your lender so you can understand exactly what you're getting into and make an informed decision. After you're comfortable with your estimated numbers, you'll submit an offer. When your offer gets accepted, your realtor will send a copy of the contract to the lender. And this is when the next step starts, which is the loan process. The loan process is when your loan officer takes your application and the documents you submitted and prepares it for submission to an underwriter. The underwriter is the person who decides if lending you money is a good risk and whether or not you actually meet all the requirements for the loan. The loan officer reviews all your documents to make sure everything is accurate and up to date. Just like I said earlier, your loan officer verifies your income, employment status, credit history, and overall financial health. Sometimes the loan officer might need more information or updated documents from you, such as more recent pay stubs, if the one you provided was old, or an explanation of a large deposit or withdrawal from your bank account. Doing all this ensures that you can afford the mortgage payments and you are a reliable borrower. Now, while this is going on, your lender will help you order your appraisal. An appraisal is an important step in the home buying process. It helps you determine the fair market value of the property that you want to buy. Think of it as a professional estimated report of the home's worth. This is done by a licensed appraiser who inspects the property and compares it to similar homes that have recently sold in the area. The appraiser looks at a lot of factors like the size of the home, the condition of the property, any improvements or upgrades the sellers have made, and the prices of comparable homes in the area. Then they compile this information into a detailed report which gives you an estimated value for the home. The lender wants to make sure that the amount of money that they're lending you matches the value of your home. So if the appraisal comes in lower than the purchase price, you might need to renegotiate the price with the seller or bring additional funds to cover the difference. Now, the appraisal is paid up front, meaning that it won't be rolled into your final closing costs. And sometimes your lender might have you order the appraisal early because it can take a week or two for the appraiser to go out, view the property, and give that report back, which we will need to continue the underwriting process. So from the top, we finished your application, you're under contract on the property, you started the loan process, ordered the appraisal. Next, you like this video and subscribe for more. Then you started the underwriting process. The underwriting process is when an underwriter takes an in-depth look into your financials, examining your entire file that the loan officer has prepared, making sure everything meets federal guidelines for mortgages. They are looking at the credit history, income stability, employment history, debt to income ratio to be sure your financial situation isn't changing. Also, they'll be asking your loan officer for more information or additional documents from you. This will be back and forth until the underwriter is satisfied with the file. During this period, you'll receive a set of disclosures, including an important document called the loan estimate. Now, this document details all the features of your loan, such as the down payment, mortgage insurance, homeowner's insurance, taxes, and other costs like title and recording fees. It gives you a more accurate picture than the closing cost estimate of what your loan will look like financially before it's approved clear to close. Now, before you are approved clear to close, which is the very end, you are conditionally approved. A conditional approval means your loan is almost ready, but there are a few things that are needed to complete the file. For example, you might need to provide the missing page of a bank statement, or shop for homeowners insurance quotes and submit your chosen policy. It's normal to have a few conditions to address after underwriting. During this step, you'll work with your lender and their team to meet these conditions. Once everything is provided and approved, the lender can issue a closing disclosure, which is the final step before your loan is fully approved and ready to close. A closing disclosure is a detailed document that outlines all the terms and costs of your loan. It's very similar to the loan estimate, but more accurate and closer to the actual final costs. When you get to the closing table, you'll notice that the initial loan estimate you saw might have had slightly higher fees. This closing disclosure will have more accurate fees, and the final closing disclosure form that the title company will give you will have the exact fees that you'll pay at closing. After you sign your CD, you are now clear to close. A clear to close is like getting a light at the end of a tunnel after a long journey. It's the moment where you can finally take a deep breath and relax because the entire loan process is complete. At this point, all that's left to do is schedule a time to close the house and do your final walkthrough. This is the exciting part, where you'll sit down at the closing table, sign the final paperwork, checks will be distributed, and you'll officially get the keys to your new home and become a homeowner. Don't forget to come back to this video and comment when you do. Tell me how this video helped you out. Hopefully this explanation makes the whole process of buying a home in terms of a mortgage more clear. See you in the next one.